J-Blog, 26th of September 2009. Starting out today looking at the US dollar. Seems to have found a bit of a bottom here at 76. I was talking about that if the dollar ever did find a bottom, it could have a strong effect on both commodities as well as the stock market. Because the dollar can absorb a lot of liquidity, obviously, if the market goes from greed and switches over into fear, then the US dollar, despite everything, is still the place of the destination of choice when fear takes over. And that seems to have happened. Some of the information that came out last week was definitely not that promising. Housing, there was some bad news in housing, and there was also some bad news in orders. And what I've been talking about for a while now is that slightly better news is not necessarily good news. So the market is starting to reevaluate the fact that it has run much further, much faster, really, than it should, considering the fundamentals. So we could be seeing an escape into the US dollar for safety, and the sell-off of commodities and equities if people start to question whether the recovery is actually as fast as we have been led to believe by the news, the Federal Reserve. So that's a possibility here. We've got a MACD that is crossing over. We've got a stochastic that is going above. The yen is going up slightly as well. I did mention a few, I believe last week I mentioned the British pound. British pound, very interesting. The British pound encountered resistance right here, and right there. Couldn't break through that barrier, then broke above this barrier and then dropped below. Couldn't hold it. Technically, this is a technical signal that says it should go a lot higher. Yet those technical signals have been failing a lot as of late. Which is why I am thinking that standard technical analysis is simply too well known. Just like that head and shoulders that we had, reverse head and shoulders that we had a few months ago, that should have triggered, head and shoulders actually, that should have triggered a downtrend and actually did not follow through, even though it broke through support. But then it just reversed and it kept going. So the British pound has been a big loser this last week, and this is a possible head and shoulder formation at this point. Australian dollar, Australian and Canadian dollars are basically your commodity currencies. The Australian dollar is still going quite strong because it does still have some very high interest rates, so therefore it is attractive for a carry trade. The Canadian dollar has started showing some weakness, which could flag a potential weakness in oil coming up as well. Looking at the S&P 500 for Friday, Wednesday, Thursday, Friday were down days. So this could be potentially the start of something more significant, or it could be yet another pullback, as we have seen basically for the last 6 months. The market has been teasing, pretending to go down, and then jumps straight up again. So we'll see how next week goes. And I continue to be leery of this entire run-up, and sold out of it much too soon. Of course, I'm not totally happy with that, but on the other hand, I feel that if and when this market breaks, and my contention is that it will at some point, it will break fast. so I prefer to just be out of it because preservation of capital is at the end of the day much more important than return on capital. Looking at the Apple chart, Apple's still going very strong, but even it had a few not so good days last week. MACD is potentially rolling over here. The stochastic is dipping below. Money flow is starting to turn negative. OBV is still very strong. Agrium I got exercised out of on last Friday. At when Agrium was somewhere around 52 here, I was exercised at 50, which is fine with me, as I bought it at 45, so I still made a profit plus the option sale, and now it is 48, and I don't mind buying it back and starting that option sale again, because I do believe that eventually agriculturals will be strong in the future, so I don't mind holding agriculturals, but I won't be buying it quite yet. Now the financial triple inverse has shown a little bit of movement here in the last 3 days. Of course, financial stocks have dropped quite a bit. What's interesting here is that the volume on FAZ is very strong, has been growing, and the spikes are high. So there's a lot of people who are taking the bearish side. Stochastics are picking up on this particular one, and OBV starting to show some strength, so there could be something here. The Goldman Sachs is starting to dip below. The RSI showed overbought and is now dipping low, quite significant actually, much more significant than I expected to, but is starting to dip below the 180. Again, potential bearish sign if Goldman Sachs goes down, which is probably one of the most strongest of the surviving investment banks with very good relations, but it is dipping as well below because when liquidity drains out of the market, everything drops. RIM seems to have had some bad news. I didn't even actually follow up on the details simply because my internet has been down for 5 days. I am not quite particularly happy with my provider at this point, so I've been very limited in my research that I've been able to do. Huge selling here, so I'll follow up on that sometime, but it really doesn't matter. I mean, the reasons don't matter. SKF, like FAZ, is starting to show some strength. SRS, the inverse real estate, there's lots more bad news coming in the real estate over the next year or two. Subprime has been the opening act, but there are 3 more acts to follow this one, and the bad news is definitely not flushed through the system yet. So SRS is starting to pick up. Steel, STLD, the ones I like, is holding up okay, but it's also showing some weakness, which is okay. I have an option position there, but I've got it fully hedged on the other side, so I'm okay with it going down a little bit. Vale still going very strong. Brazilian steelmaker, largest base metal seller in the world, still going very strong. I do hope that this one goes higher simply because I've got a relatively large option position in this one. And Bank of America, quite weak, as are most of the banks. So bearish, bearish, bearish as always, but as of yet the market continues to prove me wrong. We'll see what happens next week. Hope you have a good time and happy trading. Be profitable. Thanks. Bye.